Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Thursday the 22nd of August 2013. Well, thank you very much for joining, and really it's been a very interesting 24 hours. We've had two of the major hurdles of this month. We've got over them. Life goes on, obviously. The first was FOMC minutes, and the second was a torrent of start of the month, or August, preliminary PMI readings for Europe and China. So let's start with those FOMC minutes. Now, to be honest, they didn't tell us anything we didn't know already. I think the market is beginning to obsess too much about minutes. But basically it just said that yes, most members of the Federal Reserve, they are in favour of tapering this year. What we didn't find out, however, was when they're going to taper. Market expectations are now that they'll taper in September. There wasn't really anything to go on from there, except that they still expect a modest economic recovery, and it all depends on jobs, really, and unemployment. So that really kicks the can down the road regarding tapering to the next non-farm payrolls reading on the 6th of September, Friday the 6th of September. That's going to be a critical day for the markets. They're going to go apoplectic if we do happen to get a strong reading. That would probably seal the deal for tapering, well, in the market's eyes anyway, and most likely for the Federal Reserve too. Remember, that Fed meeting in September is the 18th of September. So we have one hell of a month ahead of us. It's going to be absolutely fascinating. But what does this all mean for FX? Well, we've seen the dollar absolutely start to hammer emerging market FX. It looks like it might be encroaching on G10 FX as well. We've already seen the NOK, so the Norwegian kroner, really crash heavily today. NOK fell to its lowest level since 2004. That is 9 years ago. NOK versus the dollar, or the Norwegian krone versus the dollar, that also fell quite sharply as well. So the dollar index has really kind of bounced back a little bit. It did find a good low below 81, about 80.90. And now we're just testing some key levels. 81.60 is a big level. That is the 200-day moving average. If we get above that, then it opens the way to 82.20 in the short term. So really what we're trying to see is whether or not that strength in the dollar against the EM world really starts to come back. We have seen dollar yen rally today, get above that 98 level, testing 98.50 now. Remember, 98.80 is the level to beat there. And we've also seen euro-dollar really back away from that 134 level. Likewise, cable also coming under pressure today, along with some of those other crosses. So we're going to be watching this dollar index very, very closely to see if it does signal broad-based G10 dollar strength. That's going to be the key thing to watch out for. Now, as I mentioned, we did get some very good economic data actually out over the last kind of 12 or so hours. We had firstly a positive reading of Chinese manufacturing PMI for August. It bounced back into expansion territory, and we saw a continuation of the recovery in Europe, particularly in Germany. Now, we've seen stock markets do very, very well today, and we don't think that's on the back of tapering expectations or the FOMC. We think it's more on the back of this economic data. As you can see here, this is the German DAX index. Had a really nice bounce higher. Now it's testing a critical level, 8,400. Now 4,450 or 460 is a multi-year high. If we can get above that, then that would be an incredibly bullish development. It would be a new paradigm for the DAX. So just remember that European stocks looking very, very strong on the back of that PMI data, and keep an eye out for the DAX because it could be another record high in that index. Okay, everybody, thank you so much for joining. Bye bye.